Welcome to the Fast Five by Fear and Greed. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, today in just 5 minutes, we want to find out what's in store for tech stocks this year. Now, remember, this is general information only, and you should get professional advice before making investment decisions.
That's right. As always, the tech sector has been the subject of plenty of interest for investors in the past year. Added in the rise of artificial intelligence, and there's even more excitement. Elise Kennedy is the Vice President of Equity Research at Jarden. Elise, how would you sum up last year, 2023, in the tech sector?
Down, up, and then down again. But overall, mostly better than I had started. So the ASX IT index, which is one of the key ones that we track, it started the year around 1300s and then rose to just below 2000, but then fell again to a broader range. Now, stocks, though, within that, also very volatile. You just have to look at the share price of Appen, which is, down over 70% from where it started, was one of those challenged names. But then you've got Altium on the flip side, upgrading its customers. We found that they were one of the beneficiaries, ending the year up materially higher. And then you've got Xero, a bit of this similar to the market of being down, up with a new CEO that's come in.
Okay, so volatility in tech stocks. Come on, that's not news, Elise. We know that. What about what's going to happen this year, though, 2024?
Look, I wish I had that crystal ball to tell you exactly what that would be, but I would like to think that we will have a year that is more stable than the last 2 years. And then we'll start to find that from some normalization in interest rates. So looking at that, in the US, the tone's been a little less hawkish lately. Inflation started to come down. Domestically, in our forecast, we do have one more rate hike in February, but then broadly stable until we start seeing cuts in calendar year of 25. So I think as well, with unemployment relatively strong still, the backdrop means that markets, they can still start to find some quality investments. And that, to me, is where I think the market will end up in the future.
So what stocks, any particular stocks that you'll be keeping an eye on?
I'll name two. One is Xero. As I mentioned earlier, it's been a real bit of a volatile name, just like the market itself. But they've got this new execution of their US strategy, an Investor Day that's coming up in February, I think it is. And that just is really important of, can they get this profitable US growth, or are they sacrificing the long term to be profitable in the short term? That's one of the ones I'm watching. The other is WiseTech. I have a little bit of concern, and I know you've had me on here a few times saying how much I love this name. I do think that longer term, but in the next result, I have concerns around trade volumes flatlining. You've got FX that might turn the other way. It was a benefit in the last update that they gave. And then I still have concerns around those acquisitions, that them weighing down on margins more in the near term than what the market thinks.
Broadly for this sector, what's the big risks? Is it still interest rates higher for longer type thing?
It is a bit of that concern. So we'll be watching the inflation prints. If you get that running too hot, then it goes back to those rising rates and the level of uncertainty that drives the volatility in the market, and then which helps or doesn't let investors really know where to invest as well. And then also there's recession, I think, is the second key thing. We don't forecast that as an investment house, but if we start to see some of the pressure flow through to those unemployment rates and other factors in there, I think that'll be something that could derail this rosier outlook. And then the last thing is just what AI ends up doing. That might be a beneficiary, but rather than derail, it might actually turn it around the other way. But, it depends which camp you're in, utopia, protopia, dystopia.
One of those ones. Just tell me a bit more about artificial intelligence and where you think that's going. I was talking to someone recently saying those big tech stocks in the US, no one likes them as much anymore, but they could be the real beneficiaries of AI, for example. It's kind of to your point. It's whatever camp you're in.
Yeah, I just think from a stock standpoint, the most important thing is to see the resources within the organization, utilizing them. So I find, the tools that I've seen are going to save an immense amount of time. And I don't know about you, but there's a few dinosaurs around my workplace at times that I've found if they don't take advantage of them, then they're going to be challenged to keep up and get as much done. And that to me is a way that I think or a question that we're not asking some of our stocks is, what are you doing and employing within your workplace? Because if one workplace, from a stock standpoint, is putting in real efficient AI and training tools, and then another isn't investing on that, then one firm is going to see their costs improve and profitability and be more competitive versus the other one that doesn't. That's my thinking when it comes to stocks.
Thank you very much, Elise.
Thanks for having me.
That was Elise Kennedy, Vice President of Equity Research at Jarden. I think, Michael, we need to be thinking AI and certainly looking at those tech stocks that are thinking AI. Now, remember, listeners, you should get professional advice before making any investment decisions.
Yeah, it's such an interesting sector. Thank you very much, Sean.
Thank you, Michael.
That's it for today. Make sure you hit follow on the podcast. There is a new episode every day and regular business news from January 15. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed.